Welcome to Edison TV. I'm Marverine Cole, and today I'm joined by Eric Anstee, the Chief Executive of the City of London Group plc. Eric, thanks very much for joining me. Will you explain first of all more about what City of London Group does?
Yes, City of London Group is an investment company trading on the London Stock Exchange, and we are in the fledgling index. The objectives of the group are to create a merchant bank, largely with three legs. A leg that does funding, one that an asset management business, and the third leg being private equity. We currently have a number of investments, but primarily we've already created a significant lending platform and an interesting asset management business.
What would you say are the key highlights of this financial year?
Well, first and foremost, we have cut the losses that we've been incurring in order to build our investment platforms quite significantly. We have also made quite successful disposals of one or two of our early stage investments, and that has produced some useful profits which have been able to be used to fund the growth in our individual investment platforms. The platforms themselves have all done extremely well, not only in growing funds under management, which have increased by over 100%, but a number of the platforms have increased their own revenue and turnover by over 100% as well. So the operating result is not necessarily reflective on the growth and the value that we have created in the business. I should also say that we have passed on our final dividend for this annual results, largely as a technical problem in that the losses have absorbed all our available reserves. What we now intend to do is seek shareholder approval and go to the courts to restructure our capital so that we are able to release the share premium for distributable reserves purposes and therefore reinstate the dividends as soon as possible.
It's been a really busy year for trade finance partners, so what's been happening?
Yes, indeed. I mean, the early part of the year saw us need to change its whole financing arrangements, and we've renewed and now put in place a 3-year financing arrangement with Macquarie Bank here in the UK. That facility gives us 15 million initially of funding to be increased to 25 million in due course. And that has enabled the business to secure quite a substantial growth. This business has seen major growth in the year on the back of that financing facility, and we have again doubled turnover in that business. We have increased the resources and staffing in that business, and it is now capable of taking a lot more trading business and funding people's new expansion. So we're delighted with both of all the new business that's coming into that business and indeed having put these financing arrangements in place to service it. The other part that's notable in the result for the year of trade finance is that it has achieved its operating profit level of just over £1 million for this last financial year, and therefore we're expecting a lot from that business going forwards.
What can you tell us about the development of your credit asset management business?
Well, the credit asset management team focus on two main areas. The first is professions funding, where we're lending to professions such as doctors, dentists, solicitors. Here we've seen a major growth in the business, largely on the back of institutional mandates that we've received to manage money and lend money to those professions. And we've been delighted with the way that business is developing. The second part of their business is to provide lease finance to small and medium-sized enterprises. This could be a 3 to 5 year lease from anything from £20,000 to £200,000. And that business has been able to secure funding from recently from the government sources of the Business Finance Initiative. And we have had a new fund created through that source of £10 million, and the team are busy committing those funds as we speak. And we've seen again a major demand for our services in being able to put this lease packaging in place. The marketplace itself has seen a number of major banks withdraw from this area because of capital constraints. ING Bank have withdrawn, and they were writing £1.4 billion worth of business in this space per annum. So there is a lot of opportunity for us to increase our volumes in this business, and to do that we need to access funds. So we are talking to a number of institutions, including the new business bank that the government has established, to get further funds into that business. And it is a business that requires scale. It is a business that can write money and loans up to about 50 to 100 million pounds per annum. And the team have all the systems and experience in place to be able to do that. So we're highly excited about the developments in that business.
Therium Capital Management is the litigation funding part of your business. So how's that performing right now?
Well, the case results have been rather slow to come forward, as we've already announced. But the rest of the results in the business are very exceptional. We have doubled the funds under management in this business, and we also have significant increase in cases to fund that we have seen over the last 12 months. So we've seen a 60% increase in cases coming to us for funding, and that increase has continued into the new year. We're seeing a larger appetite of third-party monies that want to come onto investment platforms for us to invest in this business. And of course, every time we get a new fund, it's on the basis of 2% management fee per annum and a 20% performance success fee. So we are building up, with now £30 million under management, a whole range of performance fees as and when we deploy that money into cases for litigation funding. I'm pleased to say that our New Jersey fund, for instance, that we have only recently raised, has now been almost fully deployed, showing that the appetite for case funding is growing quite rapidly. And we are encouraged tremendously by the volume of money that is looking to come into this, what is an alternative asset management space.
How confident are you now that the group will make profit this year?
Yes, we're very confident that each of the platforms have now reached a point whereby they can produce profits in the current financial year. It has now been 2 years where we have been supporting each platform to develop, and we've now got them to a point where I think we can see substantial profits coming forwards. And the important thing from an investor's point of view is that we see major financial leverage capability inside the group, because now we've reached that point with the funds under management across the group. Every pound that we add to additional funds under management will only add to the bottom line. So I'm fairly confident that not only will we hit profits, but that more capital can be deployed in these businesses going forward to drive the profits further. And that financial leverage is quite important, and we can see ourselves accessing deeper capital pools over the next 12 months. And even if we need to raise additional equity to do so, we're determined to access those deeper capital pools so that we can grow these businesses.
What sort of future opportunities are you spying at the moment?
Our lending platforms, first and foremost, see a great deal of growth opportunities and demand from small and medium-sized enterprises. So we see that the capability of deploying funds in that space is substantial. We are talking to a number of other institutions to deploy funds, and of course we have the discussions running with the business bank to deploy monies on their behalf, matched with other third-party institutions. So we see a lot of opportunity to drive scale into our businesses, and I think that's the critical thing, because scale will flow through into the bottom line once we have those funds under management. I think the second really interesting growth opportunity is in the litigation funding space. We did announce before the end of March that we were in discussions to create a new joint venture for international litigation funding. Those discussions have progressed extremely well, and we're looking forward to making an announcement shortly about that and how that will work and the discussions and how much is involved in those discussions. So that's the second significant opportunity we see as a group. And I think generally driving the group into this merchant bank model with the three legs of the lending side, the asset management side, and potentially further down the road having a private equity part that can participate where we are lending money into the small and medium-sized sector. I see those all very exciting opportunities for the City of London Group going forward.
Eric, thank you very much indeed. Exciting times for City
Indeed.
of London Group PLC,
Yeah.
it sounds like. Thanks for
Thank
joining
you.
us.